Welcome to Do You Ever Wonder with your host, Mike Altman. It's the podcast that will answer your questions about many of the things in life we've always wanted to know more about. Our guests, experts in their chosen field, will enlighten us about subjects ranging from real estate, business, career, science, philanthropy, and much more. Proudly presented by Hallmark Abstract Service, it is once again time to sit back, relax, and enjoy the ride on our information superhighway. And now, here's Mike Altman.
Well, hello, everybody, and thank you once again for joining us on Do You Ever Wonder? My name is Mike Altman, and I will be your host tonight. In addition, I am the CEO of Hallmark Abstract Service, but I get my most of my enjoyment out of interviewing people like tonight's guest who are experts in fields that a lot of us really wonder about. So in the best of times, it's not that easy to get a loan. You know, not everybody can walk to their corner bank, meet their banker and say, I'd like to borrow $1 million or $500,000 or even $50,000. And now times have gotten a little more challenging, but you know, who among us doesn't have a nick, a blemish on our financials? Different businesses are treated different ways at banks. You know, time in business, I believe, matters to lenders. I mean, there's any number of reasons why a bank may say no. And that's not to say that there aren't options. And that's the purpose of tonight's guest, is that there are options. Any borrower, for the most part, well, I'm not going to say any borrower, but most people can qualify for the type of financing that they're looking for. It might not be at the same terms that they see other people getting their money at, but it is possible. So one of the reasons I'm so interested in this topic, prior to the company I own now, I owned a commercial mortgage lending company. We were small balance commercial lenders. We specialized in borrowers who had nicks and cuts, who had deals with hair on them. And I know the process of trying to get those loans underwritten to a closing table. And it's certainly not an easy thing to do. And I give tonight's guest a lot of credit because he does it in a lot of different ways, and we'll explore some of those. But let me introduce, without further ado, Howie Mann. Howie,
hi, Michael. Thank you, Michael. Glad to be here with you, and thank you for the opportunity.
Of course. So Howie is the president of Quick Commercial Capital. He's expert in helping people get funds. So I'm curious about a lot of things, but why don't you describe your business before I get into all of my curiosities?
Sure, Mike. About 5 years ago, I saw a niche in the money lending business when I realized a bunch of my friends were unfortunately getting turned down by banks, as you said beforehand. If you don't fit into their little box, unfortunately, you're going to get a no. And it could take you a good month to get that no. Now, you have to have right off the bat, and it's approximate, but it's pretty accurate, a 680 credit score. So if you don't have a 680 credit score, you may as well not go to a bank. Then you have to have basically tax returns for the last 3 years that show an increase in your cash flow, in your profitability. And if you don't have that, you're not going to get the loan. Last but not least, you have to give them a personal financial statement. And they look at your assets and you look at your liabilities. And unfortunately, if you're not where they want to be, it's again a black mark. So here comes a whole new world of private lenders. They're all around the country, and they're there basically to get people loans when the bank says no. So I represent, I want to say, at least 100 private lenders everywhere, all over the country, to get people loans. When you mention real estate, it's interesting. I get a lot of my referrals, Mike, from banks. Just last week, a bank referred me. They have a client who basically does buildings, buys buildings through them. But this particular man came up with a building in Eastern Long Island that's vacant. And as you know, a bank wants to see cash flow. They want to see what's called a rent roll, a schedule of rents that being paid regularly for that building. So in this particular case, it was a vacant building. What do? I know I'm not going to bring that gentleman to another bank, but I'm going to find a private lender, which I did, to take care of this loan. The banks trust me, thank goodness, because they know I'm not going to bring them to a bank down the road that's going to make that loan and then come back to them, Mike, and take all the other business away from them.
Of course, it's a beneficial relationship. But I'd like to touch on some product areas away from real estate.
Mhm.
Although I do have a great interest in real estate, obviously.
Right.
But you represent a lot of different types of products, and
Yes.
I'm fascinated by some of them. I'm curious about some, but I know you do accounts receivable factoring, and
Yes.
it's an interest. Why don't you explain a little bit about what account
Okay.
receivable factoring is?
To simplify it, Mike, if a business owner has outstanding, say, what we call accounts payable, in other words, people who owe him money, and it's going 60 days, it's going 90 days, it's going 120 days, and he's not getting paid, it's really hurting him because he needs the cash flow to buy other inventory, pay his staff, hire new people, advertising, whatever he wants that money for, he's not getting it paid. So what we do is we go in and we buy his receivables. So is it
So
expensive? Yes.
when you say you mean the lender.
The lender, right. What happens is I'm representing the lender,
Right.
and I'll come in and I'll get a schedule of what's basically owed to this gentleman, and I'll bring it there. And honestly, if the vendors are not of a certain quality, we can't do the deal. It can't be a small mom and pop place that owes him money. Right now, I'm working with a gentleman that's owed money from Foot Locker.
Okay.
So that's an easy one. Everybody knows Foot Locker. And what happens is this gentleman has to then write a letter to Foot Locker okaying that Foot Locker will not pay him, but pay the lender directly. So it's a little involved, but it works. It's not inexpensive. It could be 1% to 2% per month. But again, when you're doing the math and going, oh my God, that could be 24%, you don't have to worry about that because hopefully you're going to get paid by your people within the next 2 to 3 months, and you'll pay off the lender.
So let me ask you a question. My understanding, and obviously, or maybe there are other kinds of accounts receivable factors that work this way, is that I would go to a factor. I would say I have $1 million of accounts receivable from Foot Locker. They would then discount that receivable and pay me whatever, pick a number, $700,000. They would retain the receivable. I would be out. I wouldn't be accruing interest at 1% to 2% a month. I would have my money. They got the discount of 300 grand, and they go and now they try to collect that receivable. Is that just a different kind of factoring?
Yeah, there's a couple of different kinds of factoring. To bring up the COVID situation, I had a gentleman buying masks from Texas, and he had orders for $1 million for masks, but he couldn't afford to pay the supplier. So I said to the supplier, just give us an invoice, and we gave him a loan against that invoice. Another interesting case, Mike, could happen with a personal injury attorney. As you know, personal injury attorneys aren't paid up front. They're laying out a lot of money. Maybe they're getting witnesses, doctors, consultations, what have you. And this particular personal attorney won the verdict and won a lot of money, but he wasn't going to get paid for about 4 months. We paid him against the judgment.
At a discount.
At a discount, right.
So now that's different. Obviously, that there are lenders out there, law cash types of places where they'll lend the plaintiff money against a verdict that didn't happen yet at ridiculously, because it's not actually a loan, but the rates are ridiculous.
Yeah, hard money rates, but I don't do that, Mike. I have to see that the verdict's there.
Okay.
And my lenders really want to see concrete evidence that the money is there.
Right. So
Yeah.
you have specific lenders who factor receivables.
Absolutely. Another thing we do off the topic is equipment financing.
Okay.
So a nonprofit homeless shelter wanted to open up in the Bronx. I met the gentleman about 5 months ago. He couldn't get a loan. Just couldn't get a loan. It's a nonprofit. Banks kind of shy away from nonprofit. Why? Just for the same reason. It's non-profitable. So why would the banks take a chance? So what I did was I went around it, and I found, believe it or not, a bank in Manhattan, Kansas, that only deals with nonprofits and municipalities. And people go, how do you do this? I said, that's my business. I'm like Inspector Clouseau. I go around and I do my homework and I find the person that's going to be the lender. So this lender was willing to finance the equipment that the homeless shelter need to the tune of $918,000.
Wow.
Had to do with bunk beds, heating, air conditioning, an elevator in the building in the Bronx, a 12-passenger van, everything and anything you can imagine.
So what are they? They're secured by depreciating assets.
Exactly. So it's really wonderful because they had a mortgage with another building with Capital One, which I get referrals from them also. And the lien from this other bank in Kansas was strictly on the equipment. So there was no conflict whatsoever. The lien wasn't on a building or anything else.
So there are no personal guarantees. Basically, the lender, if the loan goes bad, has to come in, take the property, and then go and try and sell it, and then try and recoup as much of his or hers money as they can. So it's incredibly risky, and I'm sure that the losses must accrue.
Yes and no. In this specific case, Mike, the Department of Housing in New York City is giving this client, my client, a $6 million grant, but it doesn't kick in until 9 months after he opens his doors. So once the bank sees that New York City is standing behind this, it's there. As far as personal guarantees, there'll never be a personal guarantor for a nonprofit because
Right.
nobody owns the nonprofit.
Yeah.
So you're right. You have to be willing to take that risk, but again, minimize the risk as a lender, and they were doing that.
So as actually a former bond analyst, I know the theory of risk and return. The greater the risk, the greater the return. So in a case like equipment financing, where the risk is you're securitized by a depreciating asset with a borrower who may not be pristine, what kind of rates are we talking about?
Very good question. When you go, like I've done SBA loans, I do them all the time. Right now, commercials about 4.25. The leasing rate from these people are about 5 to 5.5. And I'll tell you why. It's not a third-party leasing company. I used to lease copiers all the time when I was in the copier business. I'd use a third-party leasing company, and the rates were 10 to 15% at that time. Now I'm going to leasing companies that are owned by banks. Banks have gotten very smart. They said, why should we start a leasing division from ground up when we could just go and buy an existing leasing company with an existing client base that could use our banking services also? It's brilliant. And now these leasing companies are getting to use those 5 to 5.5% rates that are passing on to my clients. So
now,
everybody wins.
Two things. One, banks have gotten unfortunately smart, and they've gotten into the title business as well. So that's not so good. But is 5 and 5.5% enough juice? I mean, I know that it's a little bit above the 4.5. It's not a great rate, but is it a good enough rate to compensate for the ultimate losses that will occur? I mean, it seems a little light to me.
Right. Well, that's, again, that's up to the bank or the institution who's doing it, Mike. It's, for me as the broker, I'm looking for my client's best interest. And if I can find that rate,
Absolutely.
and the bank's willing to do it,
That's
trust me, they're crossing their T's, dotting their I's. They're looking for every possible way to make them feel better about it. Even the SBA, what people don't realize is that I do SBA loans for startup businesses. The Small Business Administration is stepping up. Our government, which is the Small Business Administration, they're stepping up and saying, listen, we'll be on the hook for 85%. The bank is only on the hook for 15%.
Right.
And they have to get every piece of paperwork that the SBA is requiring before they do so. So the rate of, as you were saying, the rate of, say, a failure to pay off a loan for an SBA is very, very low.
Who in an SBA loan, who takes the first hit, the government or the bank?
Well, as I said, it's a split of 85 to 15%.
No, I know, but let's say the loan's $1 million. Well, no, the loan's going to be less than that. Let's say it's 500 grand, and they're in trouble. Who does the 85% of the government get worked off, and then the bank gets hit for their 15%? Or is it the bank's 15% goes away first, and then the government goes after their 85?
I see a point. What I was told, Mike, is basically it's a simultaneous action. It's all together. It's
Okay.
boom. It's done that way. I'm working on a loan right now where the SBA is paying off this particular guy. It's a construction loan, and they're paying him off every time he finishes a phase.
Right.
So it's not one lump sum that way either, which is ensuring it's getting done.
My wife, another, I hate to keep segueing, but her prior business, she's my partner in this company, but her prior business, she was a hard money residential construction lender. When they would lend to a builder who was doing 5 houses, they would have a blanket mortgage, but as each house was completed and sold, there'd be a release of
Exactly.
that. So it's
Right.
I guess kind of the same.
Yeah. And my sympathies too, because I had referred you to a bank recently, not knowing that that bank has their own title company.
That's okay. You know what? Being in the title business, you get a very tough skin.
Yep. Yep.
So-
I'm there with you. I'm there with you. My
Yeah.
wife said, you must be used to disappointment in this industry because you're getting the people that have already been to a bank. There's issues with their credit.
Right.
But I totally enjoy it. I recently put a pharmacist into business, the homeless shelter, 2 women who were starting a personal training company together. So these are all businesses that come to me. And on that subject, if they're going to get approved by the SBA, it's good to have experience in that field. That's a very, very big thing for the SBA and the banks to see.
I'm sorry.
No, go ahead, Mike. Go ahead.
What's the typical, because I know SBA loans can be a long process. What's the typical beginning to end? And I know, like with most loans, a lot of it depends on how quickly the borrower gets you the paperwork that you need.
Exactly.
But all things being equal, they're timely, they get you what you need, everything is in the process. What would be the typical turnaround time?
I'm so glad you asked, because in my field, I have seen 7 to 9 months, and I've seen 2 to 3 months. So guess which bank I'm bringing my client to? I'm going to bring it to get it done as quickly as possible.
So the SBA loan, the government is always the government.
Yes.
So the timing differences can come into play because of the 15% bank. Each bank is going to be different. Each bank is going to take more time. The government will always take about the same amount of time, I would assume. So it does come down to the bank you use.
It does. And, the problem is there are certain banks that are so busy. So it's the old idiom, like, do you want to be a small fish in a big sea, or vice versa? And I try to bring my clients to the smaller banks that you being in the title business, Michael, you've heard of all the banks, but my clients have never heard of some of these banks. They're all federally regulated. They all have the same rates because it's SBA is an SBA loan, but I know where to bring them so that they will be, I feel, treated more so nicely than the other ones.
Well, you go where your money is treated best, right?
Yeah.
But if I'm a borrower for a New York property, I need to go to a New York bank. I mean, for a New York SBA loan, I can't go to Texas because the bank there is really fast. Do I have to use a New York bank?
No, I'll give you, for instance, I deal with the 7th largest private SBA loan lender, I should say. So there are bank SBA lenders and there are private SBA lenders. And I like to go to the private ones sometimes because, again, like you said, it could be in out of state, Minnesota, where have you. And this particular guy's national. The local bank will not be national. So that's the other thing about being a private SBA lender is they're not requiring what's called a banking relationship. They're not telling the client, send me $50,000 tomorrow so we have a banking relationship and we'll get you that loan. It's, I trust me, banks are my bread and butter, and I understand why they do it because, again, there's not that much profitability in these SBA loans. The profitability is getting a client now for the next 10 to 20 years. and doing their banking business. So I get that. I really do.
But it's good that you have alternatives.
And
That's
I know the number one private SBA lender, and I'll use his first name as David. And I met him a while ago, and he said to me, Howie, bring me all the business, and I promise I'll probably get back to you in like 3 or 4 days. And I said to myself, that's not acceptable. So I don't want a guy that's busy. So I want that private lender that's going to get back to me within 24 hours.
Of course.
Yeah.
And you have a relationship with your borrower.
Right.
So you need a good relationship with your lender. It's
Right.
it's not easy being the middleman.
No, it's not easy. And the easier I make it on the lender, the more they also want to deal with me. They'd like me to do as much work for them as possible, which is basically accumulating all the credit information, which is not an issue for me. And then once they do that, then I initiate a conference call or a Zoom call with them and the lender.
I know in my small balance commercial loan business, an underwriter can get the same deal from 2 different people. And if one person is an unknown quantity, or that one person has brought them crap before, they'll get a no. But if you
Right.
if you have a track record of knowing what you're doing, being able to explain, I mean, a lot of it is storytelling.
Yes, 100. You said that they want the story. They
Right.
want to know what's going on, what's the usage of funds, what's your exit plan? What are you going to do after we give you the money?
Exit plan is everything. And also, why are you a 650 credit? What's the backstory? We all, unfortunately, COVID, 2008, there's a lot of backstories out there.
Yeah.
And there's good backstories or acceptable backstories, and then there's not. And
yeah, the acceptable story is the other day a client says to me, he canceled his American Express Platinum card because he didn't want to pay so much. And the other one, Freedom from some bank, was giving him a better rate, blah, blah, blah. And all of a sudden he looks and his credit score went down 80 points. I said, that happens because you not only did you stop a credit card, you opened up a new credit card. So you got double hit for that. I said, don't do that again. Don't do that again. And lay low, don't lease a new car. Don't buy anything expensive on a credit card until we're finished with this loan.
Well, you hear from more residential mortgage lenders all the time. It's like, the loan was going to close on Monday, and on Friday, my borrower went out and leased a car. It's like it, but everyone's not a financial.
Right.
Everyone doesn't know, and it's tough.
Well, that's why I'm here. That's when I have an agreement with a client, it's called my advisory fee, and I'm advising them every step of the way.
You know what? If you can help a hard to fund client get funding,
Yeah.
then whatever your advisory fee is well worth the money. It's you
Thank
can
you.
pay no advisory fee and get no money, or pay an advisory fee and get the money you need for whatever purpose.
Right.
It's
Which is also a good point, Mike, because the banks are getting a lot smarter now. They're paying the Howie Manns now the referral fee, so the client doesn't have to. And if you had a crystal ball, I'd say 5 to 10 years from now, every bank's going to be on board with that, because they're losing a lot of business by not doing that. Because the broker, like myself, is probably going to run to a bank, if I can, that's going to make it easy for me and my client to not have to pay extra.
Of course.
So, yeah.
Of course. So how do you find these banks? How do you find these lenders?
It's funny, when I first went into the business, I asked that same question. I said, can I just walk in? And my mentor said, no, you just can't walk in. You got to get introduced to banks. So basically, in every BNI group, every LATIP group, every networking group you can think of, there's a banker in there. So you either become a guest of that group or you join that group or whatever. And then you ask the banker, listen, let's get together. We can help one another. I can refer to you. I expect maybe you can refer to me if you don't have the wherewithal to approve some loans. And that's how you formulate relationships.
Right. So that's, if nothing else from this discussion, and it's been a very, very powerful and valuable discussion. The power of networking is maybe the greatest lesson of all to come out of it, because that's everything.
Yeah.
How do you build a team of trusted advisors without it?
Yeah, I would say that's the only positive thing that has come from COVID, because it's forced us now to be Zooming like we're doing right now.
Right.
And you can obviously Zoom with 5, 6, 7 a day, as opposed to trying to meet and navigate around Manhattan or the boroughs to try to see even more than 3 people a day.
No question.
Yeah.
And the beauty, in the past, podcasts used to have to be in person.
Right.
And now, how easy is this?
This is wonderful, but I never ever, think that one-to-ones in person wouldn't help. I mean, I can't really put my finger on Mike, but when you get together with somebody like we did in a coffee shop and you talk, just stuff happens. Things come up that wouldn't normally come up on a Zoom. I don't know why.
Well, part of it is you're completely your attention is right on point. But also, as I used to say when I was president of a networking group, networking is a contact sport, and it's it's important. It's like when you going to go buy a car, you got to kick the tires.
Right.
But don't kick anyone when you're on a networking one.
No.
People seem to like that. I don't know. It's crazy.
I don't know.
We're running out of little time, but one interesting factoid of myself and Howie Mann is that we went to the same alma mater.
Yes.
SUNY Albany. We're both Great Danes.
We're both Great Danes. I think I graduated more than a few years ahead of you, but it was a pleasure attending the school. I went back there recently, well, about 2 years ago. It doesn't look like the same school anymore. I mean, they added so many buildings.
Well, I went there undergrad. I got an economics degree. Then I went back for my MBA. I heard that the new business school is beautiful. They built it. It's a freestanding building. I heard it's great. But I think we moved a little bit off the financing track.
Okay.
I think that the things that you've mentioned are really phenomenal. And if somebody wanted to contact you, how would they go about doing that?
Real simply, I'll give you my phone number right now. It's 516-658-3484, or you could simply email me at hmann, MANN, at quickcommercialcapital.com, or look at my website.
URL,
right?
No, what's your website URL?
Right. Well, it's basically quickcommercialcapital.com. www in front of it. Yeah. I have the podcast on there. I have a few different interesting things that I've shared on there.
That's great. And I guess my final question will be, is there a minimum dollar amount in order for someone to go for funding through you?
I'll give you the range. One of the first loans I've ever done was for a songwriter who wanted to put a soundproof studio in his house. And we basically lent him $18,000. Okay. And then there was a gentleman named Sam who wanted to put together a 300-acre with a greenhouse on top of it, cannabis agricultural farm for $60 million. Wow. So in answer to your question, Mike, there's no loan too little and no loan too much for me to take care of.
Curiosity, did you get the 60 million funded?
Here's the problem. There's something, as you know, called LTV, which is loan to value, which means $60 million, he had to come to the table with 30%. When he did the math in his head and he realized he has to have the liquidity of $18 million, he didn't have that liquidity. So the deal stopped right there. But see, that's another thing, Mike. I stop it right away. If I see it's not happening, I tell Sam, it's a dream. It's going to be a dream. Go win the lottery.
It's like when I was doing the commercial mortgages and I would get a scenario that was just pie in the sky, somebody I knew would say it was like, you might as well try and put a golf course on Mars because it's got the same chance of getting funded. But Howie, this was great. And I hope we can do this again at some point. And
my pleasure.
Thank you very much. And now sit back and enjoy the exit song.
Okay. Thank you very much, Mike.
Thanks for listening to Do You Ever Wonder? And if there's a subject that's always been on your mind, let us know. We hope you'll join us next time for the show that answers your questions. And please like and share this episode with your friends and on your social media. See you next time.
Thank you, everyone. See you soon.